Good morning, good afternoon, good night. Welcome back. Welcome to. My name is Joe Josh. I go by iChart Daily. Today is September 10th, 2025. In today's video, I'm going to be giving you a window to my thought process on what I think potentially is playing out with Bitcoin. The bottom is forming. I do think we have a nice little pump up. We'll get into that, and then I'll end the video with Doge. Discord link is in the description. Join it. It's free. It's a faster window to my thought process. Unfortunately, the Gumroad account got suspended because there was something that they didn't like. I do think that there is a major crypto silencing going on. This is now the second account that was related to crypto, and they didn't like it. So I will be researching a new website to use to allow everyone to, one, purchase the indicators that I use, as well as to suggest a video. So just stay tuned for that. So as I was talking in my last video about the 1 day, 2 day, weekly chart, certain things playing out, confirmations, liquidation zones, it's playing out. And what I mean by that is I have been posting in the community tab as well as the Discord that the 2-day chart was about to pop to the upside. And the importance of the 2-day chart, it's like it's not too early, it's not too late, it's a perfect size, perfect time frame for me for longs and shorts. It allows the play to be anywhere from a couple weeks to a month or so, and large plays as well. So what I'm trying to say is this move up, we look great. Your MACD is about to golden cross, showing momentum going to the upside, and the swing is now going up. We have the RSI has broken the moving average, which is step number one, showing you that we are bullish, right? You don't want to see rejection, rejection, rejection. You want to see a break, possible retest, and then this is showing us that we have room to grow. That's all I care about. Is there room to grow to extremely overbought territories? And that is a yes. As long as there's room to grow, I'm okay with opening up a play. Your stochastic indicator has room to grow and potentially still break this 50 level. I told everyone put an alert on like 48 and then 51, notifying you that every time it goes higher or lower, every time the RSI breaks the 50, or every time the MACD golden crosses and death crosses, you can be alerted and then go to the computer to see what's going on. You could see the divergence indicator was going off over here. You could see that we are retesting the moving averages. Once we break the moving averages, we're going to the next liquidation zone. And to find the next liquidation zone, I'm looking for where there was previous resistance and support that could potentially not line up. So you can see here the 117 is the top of these candles, and it's also the bottom of these candles. But you can see there's wicks below. So in order to catch the swing, I look for a range. Do you understand? Now, we need to speculate to say, okay, if this does play out and then we see resistance, okay, I'm special, excuse me. Okay, if we go here, see resistance here, and then come back to, let's just say here, the reason why I chose there is I am looking left. Again, you could see support at 112.5 and resistance at 112. So I'm choosing liquidation zones to choose where the next swings are going to happen. And then if this plays out, I think it goes here. The reason being is, once again, this level right here could act like support. I'll change this one to yellow, right? So I think we go up to purple. That is what's happening right now, but you'll get this video today, 2 to 3%. Then we could have a nice little healthy consolidation back to here, 2 to 3%. And then I think that would form a W pattern to the upside, right? High or low, showing me that we could break this high of 116 to 117 and then potentially retest these highs of here of 119 into the wicks of 120 to 123, something like this. And then once again, the initial play from here, from your support, would be up a cool 8 to potentially 10%. If you're using leverage, once again, or margin, you want to make sure your liquidation price is below your most recent swing. This is the swing low right here. Right here's your first one. Here's your second one. So in this move up, you want to make sure that your liquidation price is below your most recent swings here. So God forbid something was to happen, even though momentum is on your side right now, you're good to go. So that is Bitcoin. I wanted to end the video. It's a quick one because it's simple. End it with Doge. So Doge looks great on a monthly. When a chart looks good on a monthly, once again, you can't, bet with the monthly because price action has already happened, right? These are trailing indicators. But when you're catching it before the golden cross, it's happening now. When you get it before it breaks the moving average and hits these tops, right? That's what I'm looking for. Where's the range, right? Here. So we have what? The first thing you should think of is we have room to grow. As we inch closer to resistance levels, I don't care. My interest level drops dramatically, right? Stochastic RSI is extremely oversold. We have a ton of room to even just hit this downward trend line and go just back to the 50, right? These are monthly candles. So if, once again, I was trying to teach you in the last two videos, if I understand that we have at least a month or two of bullish momentum, forget doing something like this, right? Or actually, hold on. Where is the trend change is here. So that means trend lines are okay to go up here like this and like this. Okay, here's your trend. Now to find where I take profit on this way up, I go to a monthly and I see, is there any places in the past that we have seen, once again, selling pressure? You could see here at the 28.2. You could see, again, the top of the wicks lining up with this candle at 33.7. I would line up these wicks here with these candles at 42. Now, those are my three levels. I like to choose three levels. I would do, let's just say, 25 to 30% take profit here. This would be a 18% play. If you're using even just a 10x leverage, you get the point. This is a 35 to 40% play. The tippy top is 65 to 75%. I'd probably do, let's just say 25, 25, 25, and then leave 25% because what's the trend? The overall trend is swing high, swing low. Next swing high is higher. Next swing low is higher to this low. Next swing high is higher to this one. Next swing low is higher to this one. So who am I to say that the trend is changing, that this next swing high isn't higher to this one and somewhat goes into these candles? Now, I want to teach you something else. You see how there's just a candle here? I bet you if you go to the 3-week, you could see formations happening, right? And that's where I use multi-time frames to help me understand chart formations, okay? Boom. Like anything that sticks out like a sore thumb like that, right? Let's go right here. Go back to the monthly. Yeah, see how that lines up? Boom. See? But you wouldn't have known that that is a resistance level or a liquidation level because it's just showing you a wick, right? So I click on that, and that shows you a little bit better, and you can zoom in again. So now you could fine tune it and be like, yeah, there, 32, 38, 44. And your risk reward, once again, liquidation zone below these wicks. If you're playing it right, I'd probably put it below these wicks here, like this. That's keeping it tight. Keeping it really tight, you go to a daily and you keep it below your most recent swing lows here at 20 cents. Yeah, so this is here, right below the wicks here. And then you're looking at, boom, you have the same highs here. Pause the video. What is this pattern? Where you have the same resistance level of 25 cents to 27 cents, but your lows are getting higher and higher and higher. Does anyone know? Put it in the comment section. Help a dude out. It's an ascending triangle. An ascending triangle forming at the golden cross of a monthly time frame is more bullish. How do we measure this move? Most people will say you take the entire flag. I am more conservative. I'm telling you to take the middle of the flag because, once again, I say in every video, I want to be right. If I said 17.5, 15.5, 13.5 was the range that I would like to buy in the most recent bear market, and 17 and 15 hit, but 13 don't, I look like a genius. But if I said 13, right, and that doesn't hit, then I look like an idiot. If I say anywhere from 35 to 45 cents, I think this play could go to, and it goes to 36, I look like a genius. If I just said I think it could go to 44 cents and it goes to 39 cents, then it looks like I don't know what I'm talking about. So I want to make sure I'm taking the meat and potatoes, right? Even more conservative if you'd like. I like to use levels, right? So if it went from here to here, I'm going to use this level. I'm going to go to the breakout level, right? So resistance is 24 cents to 27 cents. I'm not going to use 27 cents. I'm going to use 24 cents. Why? Because I'm okay with a 50-something% play in, I mean, how long did this take, right? From here to here, same play, 50-something%, right? This was 31 days. This was 35 to potentially 40% in 20 days. So once again, that's no leverage, no margin whatsoever. You need to figure out how much leverage you could use from now so that your liquidation price is below 18 cents. If it's at like 18.7, then it's like a 10, 15x leverage, whatever it is. A 50% play turns into 500. Okay, and then once again, I'm leaving 10%, 20% for the masses to potentially go higher than 45 cents. If news comes out for Doge when it's at 40 to 45 cents and the indicators are showing me bearish divergence, bearish market structure, mid-term time frames turning bearish like death crosses, RSI breaking moving averages and going below, stochastic moving average breaking the 70-80 line, that's market change, right? During a bull run, you're looking for the stochastic to death cross but stay potentially above the 80 line, showing you that it's a continuation to the upside. That's it. And also your RSI staying above the 50 and your MACD staying in a golden cross structure, which is when the blue line is above the yellow or the shorter time frame is above the longer time frame. That's the video. Love you guys. I will be watching the weekly chart on Doge. Come on, any day. Here we go. So you could see here the past two tops. So we went from 7 cents to 23 cents. We went from 8 cents to 47 cents. What happened when the run was over? The RSI went to the 70 and above. The MACD started to show bearish structure, dark green to light green. That's it. We are officially at 54 to 50 on the RSI. Once again, overbought the last two times was, let's just say, 69 to 81. Room to grow. Enjoy the day.